a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to talk about technology ETFs here with our ETF Research Director, Nina Mishra, who, according to what I'm hearing from you, you seem to be pretty bullish on tech ETFs. Why?
Yes, first of all, some of the big names in the technology sector, including Apple, Amazon, and Cisco, they delivered better than expected results and provided upbeat guidance. And technology stocks have been outperforming the broader market this year, and I expect that trend to continue. First of all, CapEx is expected to rise this year. Many companies held back on capital spending due to economic and regulatory uncertainties, but now with the economy picking up steam and midterm elections behind us, I think companies will start spending this year, and they have to, because they have to transform themselves in order to meet the demands and needs of their customers.
Well, if they start spending, that means that those huge piles of cash that they had on hand are going to get dwindled down a little bit.
Little bit. They have a lot of cash on their balance sheets. Apple itself has 178 billion in cash.
Wow.
And overall, the technology sector holds more than half of total US corporate cash, and they have been returning a lot of that cash to their shareholders in the form of dividends and share repurchases, and I expect that trend to continue this year. They will be returning more and more in the form of dividends and share buybacks, and because they hold so much cash, they are less vulnerable to any hike in interest rate this year.
So is this a growth sector that's likely to continue to outperform?
Yes, you know, last couple of years, defensive sectors like utilities performed very well, but as the economy is growing and the labor market is improving, I think investors are more likely to embrace economically sensitive sectors like technologies, which typically perform well in this kind of growth, higher growth environment. And also, there are many emerging trends and technologies like cloud, big data, mobility, Internet of Things. So these new and exciting opportunities, they create more opportunities for technology companies as our world is becoming more digital, and you know, the role of technology continues to grow.
Yeah. Now, as always, you've brought a couple of examples of these ETFs. First one, Vanguard Information Technology ETF, VGT, the ticker.
Yes, it's a very popular technology ETF. It holds more than 7 billion in assets. Very cheap, just 12 basis point in expenses. Holds about 393 stocks,
Wow.
but 17% allocation to Apple, which is good in the current environment when Apple stock looks so good. It's a Zacks rank #1 strong buy ETF.
And then the other one is the iShares US Technology ETF.
Yes, the ticker is IYW, and this is also pretty popular with more than 3 billion in assets under management. Slightly expensive, charges 45 basis points in expenses. This has less number of holdings, 140, but has a 20%. More than 20% allocation to Apple itself. This is also a Zacks rank #1 strong buy ETF.
Do you own either one?
I don't.
All right. You can check out more on this particular article, because I believe there is an article on our website that goes along with this video. And you can check out more ETF information in the ETF section of Zacks.com, and you can link to it right off the homepage by using the Funds tab in the top toolbar on the homepage. With Nina, I'm Terry Ruffalo.